What's happening, guys? It's the Stock Guru, the coolest stock trader, and in this video I'm going to be talking about my favorite pattern. It's probably like the most I'd say it's probably the most prevalent pattern there is in the stock market. I see it, I'd say, almost every single day, and it's really the pattern that I wait out for. This is the pullback pattern. It goes by some other names, but we'll get into that. But this is really like my main pattern that I trade. I look for it every day, and I honestly find it like every single day. So it's basically just about trading it. It's pretty easy to find. So we'll get right into it. It's like I said, it's a very common pattern. It's kind of a part of history. You can see in books, you'll see them talk about this pattern. So as you can see here, it's also known as the cup and handle pattern or the ABCD pattern. It's all basically the same thing. A big spike up, a bit of a pullback, and then move to the retest the highs basically. I'll get all into the steps of it, but I just wanted to give you some type of background that it can also be called the cup and handle or the ABCD pattern. I like to call it the money pattern. Yeah, I guess you guys will find out why when you watch this video. But for the purpose of this video, we're going to be calling it the pullback pattern. So let's get right into what it is. So there's 5 steps to the pullback pattern. There's going to be the spike, the big spike up, or it can actually work in both ways. So it could be a big drop down. But for this case scenario, we're going to say the spike, number 1. 2, a pullback. 3 is going to be a find support. 4, it retests the highs. And finally, 5, it'll make new highs or it'll get rejected at the high of day. Now, it works the same way. It could either be a 1 drop, a 2 pullback, still same thing. 3 finds resistance. 4 retest lows, and then 5 rejected at lows, finding support, or makes new lower lows, right? So it can go both ways, but just for the purpose of this video, it's going to be we're going to be doing the upward version, okay? So step 1, we're going to find a spiking stock, just like the chart that I have here for you. You can see it's a nice spike up. That's the step 1, right? And now step 2, it begins to pull back. So it's still technically bullish, but it's not on the uptrend. So we're not chasing the stock by buying it, okay? It's not like we're going to be trying to get in here, chasing it upward. We're waiting for this pullback, okay? That's the second step. It's very important. And in this little line that I have drawn up here, this red line, just for some context for you guys, this is the 50% mark. So if you were to draw Fibonacci retracement from the bottom of this move to the top, this would be where the 50% mark is, that middle line there. That's just why I have it up here. Excuse me, it really has no other significance. So moving on to step 3, after it has that pullback, now we're finding support, okay? So we have this kind of support area here. It comes back and it kind of finds support at that same price level here, okay? So that's very important in the pullback pattern, is when it has that pullback that it finds some support, because it's very typical to see a stock spike up like this and then come on right back down. So for this particular pattern, we're going to have to find a support. My general rule of thumb is that if it finds support above this halfway point of the move, if you guys are confused about what this line here, the halfway point, check out one of my last videos about the Fibonacci retracement tool. It'll make a lot more sense. But moving forward, if it finds support above this halfway point, I'd usually say it's a little bit more bullish. And if it's coming down here and having trouble finding support, I'm really probably going to be bearish on that stock and might find myself taking some puts, so we're shorting it. So anyway, so we have the spike up, the beginning of the pullback, and now we're finding support at step 3, right? Now step 4, we're going to be retesting the highs, okay? So this is where the money comes in, because the decision after here, it can either break through or get rejected. So what I like to do is, once it finds some support, I like to ride it up, and then if it's able to break new highs, I also like to trade the new highs, the break of new highs, okay? And that is what a lot of traditional traders are doing. It's been around for... Look at this. If I just grab this book here, I bet there's something about trading new highs, okay? All these trading books and courses out there, they all talk about buying the new high. So that's really what I'm talking about here, is I'll buy into the new high. But like I said, guys, it can get rejected. So if it gets rejected, I usually don't short them. But it's something like, there's a ton of different strategies, okay? So I'm not going to spend too much time getting into the strategies. But it's really about this pattern. So again, we have the big spike up, a pullback, it's finding support, and now it's retesting highs. So at step 5, it's really the decision maker. It's either going to make new highs or it's going to get rejected here. One of the two has to happen. So we move on to step 5, and you will see in this case scenario, it makes new highs, and it continued to make new highs later in the day on this particular stock. But it doesn't always play out like that. So let me show you some other scenarios. If you look to the left here, we have Alibaba, okay? This, I'm not able to zoom because I'm not on Thinkorswim. This is actually on a PowerPoint, but this is a reverse pullback pattern, a reverse ABCD pattern, or cup and handle pattern. This really isn't a cup and handle, but a cup and handle just has a similar setup. It's very similar setup. So on this reverse pullback pattern, we have this big drop down here, right? And then it has this pullback up where it finds resistance. It tries to come back again. It finds some more resistance there. And if you were to pull up a Fibonacci retracement, again, this is about that halfway point. So this is a perfect setup knowing this is kind of what we're looking for here. And then as you can see, once that pullback happens, it goes retest the highs here. You can see it kind of builds a flag pattern here. And then it finally makes lower lows, okay? And now, again, here we have natural gas. And this is just to show that it can go both ways. So you can see here we have the big spike up in the middle of the day, and then it begins to pull back right around that 50% of that move, right? This is exactly what we're looking for. And then it starts to make that move back up after it finds support to retest the highs. Now, in this case scenario on natural gas, it gets rejected and forms a double top, which is another pattern that we can get into, which is another video for another day. But it shows that it doesn't always make new highs. Sometimes it'll get lower. So that being said, guys, I hope this video made a lot of sense to you. I'm going to go ahead and skip back to this right here so you guys can get a good idea of what this is. But I hope I did a good job explaining this. But now I'm going to go into 3 stocks today that actually had an ABCD pattern happen in them or something that might help you guys out. So I'm going to break right into that. So I'm going to swipe on over to Thinkorswim here. And the first one I have is Bank of America. So if we take a look at Bank of America, I'm sure you guys are already seeing it after this nice little knowledge that got dropped down. You can already see the ABCD pattern here. Okay? I can put a Fibonacci. Actually, yeah, how about I do that? I'll put up a Fibonacci so you guys can seriously see what I'm talking about here. Let me just try to get like the best view for y'all. I like that. Okay, so the spike really starts to happen here, right, guys? And we'll take it all the way up to the top here, right where it makes these highs. And then you can see that it begins to pull back here, right? It begins to form this flag pattern. Now, they don't always form a flag pattern, but it begins to pull back here. And you can see it finds support right here. And this is a pretty high on the Fibonacci levels. So to me, this seems pretty bullish. I'm going to go ahead and delete the Fibonacci now. Just wanted to show you guys that. So it finds the support, and it doesn't really have to go down very far before it finds support. So on a stock like this, I would typically be pretty bullish. So when it begins to make moves up, I wouldn't be afraid to hop in. And as you can see here, it kind of gets up and pulls back a little bit more and tests the highs again, comes back a little bit more, and then it finally breaks through. So it doesn't always just fire right through, okay? Now, in some case scenarios, it will kind of have a very quick micro pullback and fire right through. So if you actually zoom in on the first couple of minutes here, remember these are 1-minute candles. On Bank of America, in the very beginning of the day, I actually traded the second one here for profit as well. So it has this initial spike up, and then it has this micro pullback, right? And this is actually a pullback pattern right here, right? Just basically a miniature one, right? It has this pullback, and then boom, this powerful break of new highs. That's like my favorite pullback pattern look right there when it has this big spike through. And again here, when it has this little pullback from this spike up, this pullback, and it finds some support here, and then it begins to go through. This is the best. When you see multiple green candles breaking into the new highs, that's like my favorite way for it to go. Now, in some of these scenarios, it could easily topple over right when you buy, and that's just part of the risk, but we're going for high probability scenarios here, okay? So this is why the ABCD, the pullback, the cup and handle, the money pattern is so profitable. Now, the reason I like to call it the money pattern, I think I'll just tell you guys right now, is it kind of makes an M, right? So it has this move right here. Oh, wait. Let me draw it up for you guys. It kind of does an M because it's going to do this initial spike, then the pullback down, and then it pushes up to retest the highs. Now sometimes it'll stop here and the M will go back down that way, but in this case it keeps going. But it always comes back down, and that's where the M is formed. Sometimes it'll come back down at the highs. Sometimes it'll come a little bit below the highs. Sometimes it'll break the highs. But it always forms this M, this lopsided looking M. So now let's just go over to Apple. This also happened on Apple today. We can see the pullback pattern. I just want to give you guys a couple different case scenarios to reference. So you can see this great spike here, guys. So it came up on the scanners here. This is another thing that we can get into, but the scanners to find the ABCD pattern. I mean, I probably was already looking at Apple anyway, but this will come up in the scanners when you look for it. You'll find that nice spike, and then on Apple it had this pullback, but it didn't have that great follow through to break a new highs. It came up, tested the highs, and was rejected, but it didn't make lower lows. It went and ended up going to retest the highs again and was rejected again, and it's actually making higher lows here. So it actually forms a bit of a flag pattern here, right? Because it's having the same resistance. And then it eventually goes ahead and breaks through and makes higher highs. Okay, so that's just like a different look to the pullback pattern. I actually don't see this flag formation happen on it much, but that's just one way it can go down. And then we can see Microsoft. It had a reverse pattern today. Actually, I think this is actually very important because this one really just shows how this pattern can repeat and repeat and repeat, just as it did on Bank of America earlier, how I showed you. It has very early on it has this first this first pullback pattern, then the second pullback pattern, and then later in the broader scope we have this third pullback pattern. They really kind of just happen over and over again. So if you look at Microsoft, you can see the reverse pullback pattern happens here this morning. It has this big sell-off, and then it has a bit of a pullback up, and it finds resistance pretty quickly here. And then if you want to, you could short this back down for the break of new lows. Now, this is another reason I want to show you guys Microsoft, because this is actually kind of probable. Can I even talk? I'm kind of going too fast here. This is probable. This can happen. It's not likely. It's not. I mean, guys, this is all just case scenarios, and it's all statistic based. So I can't give you guys exact statistics, but you see here when it goes to break lower lows, or in other cases it would be new highs, but for this it's lower lows, it has this doji candle and it ends up getting rejected. So this just goes to show that these patterns don't always follow through. Sometimes it'll show that it'll go the other way. So it has the big pull, the big move, then the pullback, then it retests the lows, and it gets rejected. So then you guys could play it this way, right? And actually, if you look, go ahead and look, you see this big spike that it has, and it ends up actually having another pullback pattern. It pulls back down, comes up, retests the highs, and breaks new highs. Now that's a longer scope, but the pullback pattern basically just happens over and over again, and you can really identify it by finding spikes or big drops in stocks. It works for longer time frames too. Like you could do it for the 1 day, 1 minute, like I've been doing today, but you could also go to a 1 year and 1 day chart, and you'll still find the pullback pattern all over the place. I'm actually going to be doing a live stream today going through some of my swing trading watch list, and you'll definitely see some pullback patterns in there if you want to check that out. I'll have the video is going to be coming up live at 7:30 tonight before the Patriots game, so I'll be showing you guys how it kind of can work with different time frames as well. In this video, I really focused on the day trading 1 minute candles, but guys, this pullback pattern happens seriously every single day. It's the most common pattern in the stock market, in my opinion, and is my favorite pattern. So I just wanted to share the knowledge. I hope that you guys got something from this video. If you did, please drop it a like. If you have any questions or comments, go ahead and throw it in the comments section. Everything is appreciated here, guys. If you guys want to follow my journey, I post it all on Instagram. My @name is TH3 Stock Guru, so like the Stock Guru, but a 3 as the E. Same for Twitter. I post my trades on there almost every single day, and I try to keep up with you guys. I have some pretty crazy stories, and I also have a Discord chat that you guys can check out. If you want to check it out, just DM me on Instagram, and you guys can get in there. It's totally free, and I do my analysis on there in the mornings. I post my watch list, my intraday watch list that I'm not going to show right now. I always post in the mornings usually before 9 a.m. But yeah, I think that's it for this video, guys. So I hope you guys enjoyed. But yeah, I'm out of here. It's been the coolest stock trader on YouTube. All right, so don't forget that it's the Stock Guru. Peace, love.